Hello traders, you're welcome back to another deep dive into a powerful trading strategy. In this video, we are going to be breaking down the unidirectional trade strategy, okay? It is a method that focuses on trading in one dominant direction based on clear market trends, okay? That's the reason why it is called unidirectional, right? Unidirectional trade strategy. Now, this strategy is perfect for traders who want to simplify their decision making, avoid market noise, and focus on high probability setups. So we're just going to cover everything you need to know, how to identify high probability setups. All right, we're going to consider how to identify strong trends, choose the right tools and execute trades with precision. So you might want to grab a notebook and let us get started. Okay, and hey, don't forget to like this video and subscribe to the channel for more actionable trading insights. Now, the unidirectional trade strategy is all about simplicity, okay? Instead of trying to trade in both directions, or predict reversals, this strategy focuses on aligning your trades with the market's dominant direction. Now, why is this important? Well, markets often follow trends, right? And by sticking to the prevailing trend, you can avoid the noise of smaller counter trend movements. Okay, now this makes it easier to stay disciplined and avoid over trading. Think of it as swimming with the current rather than against it. Okay, so it is less stressful and you are more likely to achieve consistent results. All right, now let us talk about the tools you'll need to identify the market's direction. Now, there are a few key methods that work exceptionally well for this strategy. And the first is moving averages. Okay, so we're going to be using a combination of the 50 period moving average and the 200 period moving average. All right, so use a combination of short-term and long-term moving averages to determine the trend. For example, if the 50 period moving average is above the 200 period moving average, you are looking at an uptrend. All right. Then you're going to be also making use of trend lines. So you might want to draw trend lines. Okay, draw trend lines to connect higher lows in an uptrend. For example, what we have here, connecting higher lows in an uptrend or lower highs in a downtrend. Okay, so if you have a downtrend, you use your trend line to connect lower highs. Okay, these visual guides help confirm the market's direction. Now, it's important to also pay attention to higher time frame analysis. Okay, so in as much as you might want to execute your trades on smaller time frames, always check the daily time frame or even the weekly time frame, right? Just to understand the broader market trend. Okay, now this prevents you from trading against the dominant direction. All right, now here's how to execute the unidirectional trade strategy in 5 simple steps. Okay, the first is to analyze the trend. All right, you analyze the trend. So you start by identifying the dominant direction, right? Start by identifying the dominant direction using moving averages, trend lines, or the higher time frame charts. Okay, and then you wait for a pullback. All right, wait for a pullback. For example, on the higher time frame, we can see that we actually had, we had a sell move, right? We had a sell move all the way to, this point, and then we had a breakout from this bearish trend, and we actually had a kind of a retest, but it seems as if It seems as if the price is coming back for another retest or something. But you can see this first candlestick that was just after the breakout, it actually retested the trend line. But we might still have another retest, or it could just be a pullback before we have a continuation. So basically, we are having a prevailing sell move right now. Okay, so if you come back to the smaller time frame, you might kind of be biased towards a sell trade, right? But depending on the kind of trader you are, you can still decide to, if you are a scalper, you can still decide to take trades in any direction. But basically, if you're trading in the direction of the overall trend, meaning that we are kind of having a sell, we're kind of having a sell move, but in an overall, we are having a sell move, right? But in a possibly beginning buy trend, right? Because this sell structure has been broken already, so we could possibly see a buy trend about to start. But remember, confirmation is key. All right, so now sell opportunities could be like the dominant opportunity. All right, so in this case, ideally we are supposed to wait for a pullback and then enter a buy trade in the direction of the trend. But considering the fact that this trend now is kind of looking to be a sell trend, kind of, yeah, so let's just look for a better example where the trend was clear. Okay, so in this scenario, we can say we had a clear trend. Okay, so in this scenario, you just wait for a pullback, and as the price pulls back, once you have confirmed the trend, then you can go ahead to enter your trade. Okay, enter your trade when the price shows signs of resuming the trend, such as bullish candlestick pattern in a buy trade or bearish candlestick pattern in a sell trade. Okay, and then it's important to set your stop loss. Place your stop loss just below the recent swing low in an uptrend, or above the recent swing high in a downtrend. Okay, and then you just let the trend run. All right, you let the trend run. Use a trailing stop or a fixed target to manage your trade. Remember, the goal is to ride the dominant trend, so avoid closing the trade too early. Okay, now to make this strategy even more effective, keep these tips in mind. Stick to the trending markets. Okay, avoid using this strategy in choppy or sideways markets. All right, look for clear, strong trends before entering a trade. Be patient. Okay, wait for the perfect setup rather than jumping into trades impulsively. Patience is key to success with this strategy. Also, combine with other indicators. All right, use tools like the relative strength index or volume indicators to confirm your entries. Now, this adds an extra layer of confidence to your trades. And then finally, avoid over trading. Okay, one or two quality setups are better than multiple mediocre trades. All right, so focus on high probability opportunities. Now, let's just go over some common mistakes traders make when using this strategy and how to avoid them. The first is ignoring the higher time frame. All right, always check the bigger picture to ensure you are trading in the dominant direction. Secondly, it is bad to overcomplicate the strategy. Okay, keep it simple. Don't clutter your charts with too many indicators. Okay, and then it's bad to fail to use a stop loss. All right, protect your account by always placing a stop loss. Even the best strategy can encounter losing trades. Okay, so always make use of stop losses. And then reversing trades too soon, it's bad. Right, stick to the plan and resist the urge to trade against the trend, even if it seems tempting. And that's the unidirectional trade strategy explained. By focusing on the market's dominant direction, you can simplify your trading and align yourself with the trend. Remember to use tools like moving averages and trend lines to confirm the trend. All right, and always stick to your trading plan. If you found this video helpful, don't forget to give it a thumbs up and hit the subscribe button so you don't miss our next strategy breakdown. And let me know in the comments what's your favorite tool for identifying market trends. In the meantime, thank you for watching, and I'll see you in the next video. Happy trading.